Hey friends, Barry Burns here with Top Dog Trading. So today we're going to talk about breakout trade strategy, but we're also going to use this just as an example for a bigger picture lesson. And that lesson is back in the days of yore when I was losing money very consistently, I thought, hey, why am I losing money more than I'm making money? And I'm doing worse than just flipping a nickel. You know, it could be a blindfolded monkey and make more than me. And I'd already studied technical analysis, so it seemed illogical. But I took that hold of that and I said, okay, so what if I just took the other side of all my trades? Then I'd make money, right? So I took that, and that's not a bad thing to ask yourself. Go through your trades, document them, and look at what would happen if you just took the opposite side of your trades. Now, that is not alone what you need. What you need to do is to do that, see if that is true, and then reverse engineer the logic of your trades and find out where that is faulty. So I was taught back in the olden days, maybe some of you have been as well, to trade breakouts. All right, so you could do it with the real body. You could do it with, the high of the bar if you wanted to. I was always taught to look for volume, to come into the market around that time. And so I would do that as well. And these trades, they actually kind of worked for me for a little while. But then not so much, especially in the last 5-10 years. So if we go forward here, let me see, get my little captions off of there. So you can see we traded, we closed lower, so it was a red bar. I'd be pretty hesitant to buy that. But then the next bar is green. Okay, so we opened at the low, closed near the high, and so this looks like, okay, so now maybe the way that I was taught back in those days anyway was we would use the real bodies, and we would say, okay, not going to enter on that one because it went up there and that looks like a failed breakout. But then after it closes down here, it opens here and closes back up here. So then I was taught, okay, so if you get that pattern, then now you got a successful breakout. Plus you got pretty good volume, a lot better than, and again, volume is relative, but I was taught to look at kind of the average volume, which is like that, and we're still well above it. So, okay, so I would take that kind of a trade. And here's the kind of thing that would happen. It'd go up. Yay. All right. So now if I didn't get in before, now is a really good time to get in because we are well above the real bodies of the bar. We're well above even the high now. And it actually opened here right around that high and closed well above it. So now we're off to the races. We have a very bullish breakout pattern. And I used to take these trades all day, every day till the cows came home. And then what would happen is something like this. A little hesitation. Okay, I'm not scared. Okay, whoops. Okay, whoops. Whoa, wait a minute. What you talking about, Willis? What's going on there? So now the cows came home and crapped all over me. And so I'm like, what the heck? Why did that happen? And I would reverse. So I went back. I said, okay, I'm taking these trades. I'm losing more than I'm making. Let's reverse engineer this puppy. There's something I'm not seeing. And I literally remember myself saying to someone, I'm blind to what's going on. There's something that's literally happening that I'm blind to. I just don't see it. So I need to have a different perspective. So let me show you what that perspective was in this particular case. So now I'm bringing up a higher time frame. So as you can see, the chart on the left is a 5-minute chart. The chart on the right is a 60-minute chart. I needed to see the bigger perspective, and I really was blind to something. I was blind to what was happening on the bigger time frame. So, here's where we had our breakout trade that we looked at before. And now, actually, let's move that forward just a little bit so that you can see, that did not work out so bueno. Okay, so there you go. All right, so why did this happen? And that was because, by the way, you see the prices there, and we got up to, roughly 37.10, a little bit above that. Now, where's 37.10 over on the longer term chart? Okay, it's over here. Okay, so you can see that the charts are aligned. Now, on the longer term chart, this little breakout here, that was actually a wave 5. So extended in the trend. In other words, we're at the end of a trend of the longer time frame. This is not the time to be going long, especially to be trading a breakout. because, well, the trend is your friend until the end, as we've all heard. And so therefore, you don't want to be trading with the trend toward the end, as measured by wave counts, wave 5. But we want to be trading, actually, if we're going to trade a trend, we'd trade counter trend, because the trend is no longer our friend. All right, and so that's the big dealio. Now, this kind of volume here is, we've got, increasing volume, but then boom, look where that volume bar really comes in. This big volume bar, if I can draw it accurately, comes in on this down bar, this red bar. So this is a very good reversal pattern, actually, and that's exactly what happened. And so if we move forward here on the longer term time frame, I mean, just, horrible, right? Horrible. If you took the trade to the long side and down and down and down. And yeah, so if you took the trend reversal trade, you would be very bueno. If you took the breakout trade to the upside, it'd be no bueno. And that's because the bigger time frame, which is what I was blind to because I wasn't looking at it. I was just myopic on one time frame, one type of trade setup, and I wasn't looking at enough information. I didn't have enough detail. I was trying to make trading too simple. And you want to keep your trading as simple as possible, but no simpler. Actually, I think it was Einstein who originally said that, not about trading, but I think he said, keep everything as simple as possible, but no simpler. And so we want to keep everything as simple as possible so we don't have information overwhelm and therefore we don't have mental overload. You can't trade that way. There's too much data. You got to find out your little niche. Everyone can handle more or less data. You got to find out what that balance is for you. But from a pure statistical point of view, you must have enough information so that you can create a high probability trade. Just looking at a breakout on one time frame, even if it's with volume, whatever, no, not enough data to create a high probability scenario. So for me, for my trading, I use 5 pieces of uncorrelated measurements, mathematical rules, objective, measuring money flow, but 5 uncorrelated variables. And then when all 5 align, then I take my trade. Operative word there is uncorrelated, by the way. And that's all I need. If I add more to that, it gets a little more complex and I have diminishing returns. If I do less than that, I don't get high probability trades. So I always look at multiple time frames. Okay, and I look at the strength of the market. I look at how far are we in the trend. Trend is not always your friend, and this is why you must have some sort of way of measuring trend. By the way, these are not Elliott waves. These are, well, I call them Berry waves because I've got my own way of wave counting, which is more objective and rule-based than Elliott wave. And so I created these purely to measure how far are we in the trend. So anyway, take the bigger lesson away. This is one, little lesson with one type of example, breakout trading, but this would apply to any type of strategy. So if you find yourself losing more than you're winning, understand there's a logic, a market logic on the other side of your trade if it's consistently wrong. So flip it. See if taking the other side of your trades would be consistently winners, and then dig into the details and find out, what if I looked at something different? What am I missing here? Why are my trades working against me consistently? Because if you dig in, you find that, guess what? You'll turn into a consistent winner. By the way, one of those 5 elements of money flow that I mentioned is my cycle indicator. Cycles, timing your entries. And this helps you to avoid the issue of getting into the market, getting stopped out, and then the market going back in the direction of your original trade. Very important you learn to time your entries. Happy to give you the timing indicator that I use. Actually, it's a modification of an indicator already on your chart, so it's real easy. Show you how to set it up, how to trade it, all of that absolutely free. Just go to indicatorwebinar.com. It's a recorded webinar, so you can view it whenever it's convenient to you, and that's my gift to you.